sit down with Geoff Charkow from Merix Financial. Geoff and I have known each other for many years. He's one of the best underwriters in the industry. I hope you enjoy it.
We specialize 100% purely in mortgage financing. So we don't have bricks and mortars. And what we're able to do is pass along pretty much wholesale pricing to your borrowers. And not only that, like I mentioned before, with our back-end customer-friendly policies, there's a lot of opportunities for clients not only to get a great rate, but if there's a need to get out of your Merix Financial mortgage, we certainly don't hit you with higher rate penalties like you might find with some of the big banks with how they calculate some penalties. And I'm sure you've spoken to your borrowers about some of those differences too. And at the end of the day, those are really it's the fine print that really makes or breaks one lender to another lender, rate being equal.
It is something that we bring up with our client base. A lot of times they ask, they're like, well, who's Merix Financial compared to, let's say, an RBC? And when we really strip down the product, a lot of times you guys have a better interest rate, better prepayments with 20% that can be paid at any payment date, not just once per anniversary. And then the big one, like you mentioned, is mortgage penalties, where you use your discounted interest rates compared to the posted rates at the big five banks. And the difference can sometimes be tens of thousands of dollars, which to us, that just helps our clients. I mean, the stats show 74% of consumers break their mortgage every 3.2 years. So why not put them with Merix, where they have that flexibility and they don't have a huge penalty kind of weighing over their heads. So that brings me to my next question, Geoff. A lot of people are asking, I mean, we're having, unfortunately, some people are emailing us about losing their job. Some actually, their business is better than ever and it's adapted well to the change. Can you give our listeners and viewers just a little kind of snippet on what's happening in the investor market? Because at Merix, I mean, a lot of your funds are coming from various different investors in the mortgage-backed securities market. So maybe just give us a sense of what it's like there right now. How's the risk? What's their appetite?
Great question, Drew. Certainly with the sheer number of millions of Canadians that have lost their jobs or taking advantage of the CERB, there's certainly some more due diligence going on in our underwriting policies today. I wouldn't say credit has tightened up one bit. I think we're just trying to get to know the borrowers a little bit more than we have in the past, and specifically relating to self-employed individuals. Typically with a self-employed borrower, as you know, we're looking back, 18, 24 months to get a history of their income. But what we're looking at now today is how their business is operating and surviving or thriving during the coronavirus pandemic, and what type of business will there be once this pandemic ends. So we are asking a little bit more questions than we used to in the past, and specifically more so to the self-employed borrower. With the insurers, they are looking at more files sort of on a manual basis than in the past. But the strong files are still going through their automation systems quite easily. But just like I've mentioned that they're wanting to get more sense in terms of the nature of the borrower and how they're managing with the coronavirus pandemic. They want that as well. So the more information that we get from the brokers up front, and it's all about the story. If we have a good story that makes sense and it's supported by documentation, I haven't seen many files, like good files, being turned away.
I hope you enjoyed that episode with Geoff Charkow at Merix Financial. A couple key takeaways. Self-employed borrowers. Lenders are going to want to see how your business has adapted during COVID-19. Have a rationale and documents to prove it. Mortgage penalties. They're not all the same at every lender. Some of our non-big bank lenders actually have the lowest and best penalties out there. And number 3, lender appetite is still very strong, but you need guys like Geoff on the underwriting side to fight for your deal to get it done when you need it. Stay tuned for our next episode.